Welcome to 1031 University. I'm Paul Holloway. Today's topic is it possible to do a 1031 exchange on a second home or vacation home? Most 1031 exchanges are done on pure investment properties, that being a rental, raw land held for long-term speculative reasons, or a commercial building that you're running your business out of. But what about a vacation home or a second home that you might have in a resort type area? Is it possible to make that work under 1031, and at the same time, is it possible to actually use that property for personal enjoyment for a certain amount of time? Well, the answer is yes, as long as you follow this revenue procedure, Revenue Procedure 2008-16. This procedure came out to give you guidance that if you follow these steps, you will have what is referred to as a safe harbor exchange, and you are not swimming in shark-infested waters. It's a threefold test of what you need to do to make a so-called second home or vacation home work under 1031 of the code. The first test is the holding period test. And what the IRS wants you to do is to actually own the property that you are either selling or the replacement second vacation home that you're going to buy on the back end. They want you to own it for 2 full years minimum. So you have to actually own the property for minimum of 2 years. Next is the rental test. And what the IRS wants you to do in each of those 2 years of ownership for the 2-year rule is that they want you to have at least a 14-day rental history in each of the 2 years of ownership. So 14 or more days of a rental history in year 1 and 14 or more days of a rental history in year 2. I get a lot of people asking me, well, what if I rented out 1 month for the first year, but then I kick the tenant out and I just use it for personal enjoyment the next year? That will not work. It's got to be minimum 14 days year 1, minimum 14 days year 2. Now, so that satisfies the first 2 steps. The final step is the personal use test. This is the one that can tend to be a bit problematic for people that want to use the property for personal enjoyment. But the IRS wants you to actually keep your personal use to a minimum while you are holding on to that property for the first 2 years. So in each of years 1 and 2, they would like to have you keep your personal use to 14 days or under in year 1, 14 days or under in year 2. Now, technically what it says is or 10% of the rental history, whichever is greater. So it is possible that you could actually use it for personal use more than 14 days, but you would need to have a substantial rental history on that property in that year. So for example, if you rented it for 250 days in year 1, you could actually possibly use the property for 25 days, which is 10% of the rental history for that year only. But then the next year, the clock runs again, and they want you to try and keep your personal use to under 14 days in that year as well. I get the question a lot that, well, what if I don't personally use it and I'm the taxpayer doing the exchange, but my wife, my kids, other family members, they go up and use the property instead? My understanding is that you can actually have any family members tack on to your use. So probably not a good idea to try and argue that I wasn't there, therefore it doesn't count against my usage. Any family members that use it tax on to you. So once again, quick summary: hang on to that vacation home or second home for at least 2 years, or if you're relinquishing a property looking back 2 years, you got to show that you held it for at least 2. As far as rental history goes, make sure that you rent it at least 14 days year 1 and year 2, and personal use, try and keep it under 14 days year 1 and year 2, and then you will have a safe harbor vacation home, second home type 1031 exchange. So hopefully you enjoyed this piece. This has been 1031 University. I am Paul Holloway. And if you enjoyed this piece or other pieces, please subscribe to our YouTube channel. We look forward to doing future classes for you. Thank you.